if you had the opportunity to give your family tax-free, seven-figure sums in the event of your demise, like that seems like that would be sort of life-changing across generations, right? And you can often do that for the cost of one date night per month, right? Or sort of one pair of shoes.
Welcome to Financial Freestyle here on Yahoo Finance, and I'm your host, Ross Mack. Now, look, guys, no matter where you are on your journey of building wealth, you can never stop learning, and that's why each and every week I'm giving you guys gems on gems, and today's no different because we're talking to one of my really, really good friends, Mr. Ryan Smith, Vice President of Atlanta Life Insurance. My guy, Ryan, how you living, baby?
I'm good, bro. It's good to see you. How are you?
Man, it's remarkable to have you on here. To the people, to the world, listen, let me let y'all in on a secret. I was a young intern at Morgan Stanley, was very rough around the edges. I was probably like 19 years old. And Ryan was like, yo, who's this kid and how they let him even get an internship? He pulled me aside, like, look, young fella, you got to tighten up. And for that, I'm always be grateful, bro.
Hey, man, it was a pleasure to look out for you, man. I saw sort of the potential. Just had to get a rules of the game, too.
I appreciate you. But look, man, obviously I know you and I look at you as one of the big homies and you've done a lot. But to the world, who is Ryan Smith?
Who is Ryan Smith? Ryan Smith is a kid from the south side of Chicago. Grew up, my parents are still there. Have four siblings. One of my sisters are still there. But the reality is sort of good, the bad, and the ugly of growing up in the south side. It made me who I am. But also started thinking through how to sort of maximize the good in that community, how to minimize the bad and the ugly, and also understanding sort of the common trends that exist in communities like the one I grew up in, right? And so whether that's in Chicago, whether that's in DC, whether that's in Atlanta, whether that's in Los Angeles, sort of name your city, you often find sort of these similar neighborhoods that are deprived of opportunity, but full of talent. And so I wanted to think through how to unlock that talent, how to create more opportunity, and ultimately decided that my path would be building and investing in large scale minority owned businesses with the belief that they would employ from those communities, invest in those communities, and love on those communities in the way they deserve. And so that's the journey I've been on. And it's been fun and it's been rewarding.
I love to hear it, man. I love obviously what you're doing. But the reason we here, right, is because after you went into private equity with, right, alongside one of the greatest basketball players of all time, Magic Johnson, you ended up buying the oldest black-owned life insurance company. Walk me through that. Help me understand, one, why was that a great target company to buy? And then, let's actually talk about what you're doing now.
Yeah, so like you said, right, I backed my way into sort of this insurance industry, which is huge. It's multi-trillion dollars, but had not paid that much attention to it. Then back and what now, 2014, had the opportunity to evaluate an acquisition opportunity, which was an insurance company actually based in Chicago called Equitrust, which is an annuities provider. That began sort of the full-on immersion into insurance. Frankly, that company is a well-oiled machine run by a gentleman, Eric Holloman. And so discovered the good that insurance products can be, right? So if you think about annuities, you think about sort of solving what's called longevity risk, people outliving their money. There's a lot sort of discussed about sort of the retirement crisis and people not having enough saved, and annuities sort of help that solution. But all that is to say, looked for another opportunity to sort of do it again, became aware of Atlanta Life Insurance Company. And so for context, 120 years of existence, 120 years of service, founded by a man born into slavery who went on to become the first Black millionaire in Atlanta. And he did that by serving the underserved. He served this community, providing them with life insurance at a time that other corporations and other entities wouldn't. And sort of fast forward 120 years later, we're charting the next 100 years. And the mission remains the same. It is ensuring that people have financial protection and also an opportunity to grow their wealth. And so we do that through an insurance perspective, but also with a belief and commitment to we do best when our policyholders do best. And for that reason, we promote holistic wellness. So not only financial, but physical and mental. And so often sort of in the community, sort of engaging the communities, whether policyholders or not, and ensuring that they're living sort of their best and their longest lives. And so it's been sort of a merging of all my different passions into this current role, and it's been fun. It's been an honor. So enjoying the journey.
That's awesome, man. Look, when I holistically about right building true generational wealth, a huge component of it is life insurance, right? And I think about the easiest way to build generational wealth is one, you just got to be selfless by actually having life insurance, which you could then pass on to the next generation. So let's start really digging into it because I'm learning a lot more, obviously, through you and your company. But like, first off, like, what's the biggest misconception when it comes to life insurance?
It's a number of things. Oftentimes, people overestimate the cost of it, right? And so, to your point about sort of building generational wealth, if you have the opportunity to give your family tax free, seven-figure sums in the event of your demise. Like that seems like that would be sort of life-changing across generations, right? And you can often do that for the cost of one date night per month, right? Or sort of one pair of shoes. And so people often overestimate sort of the value that you can get from a life insurance perspective. And then two, there's often sort of this question about sort of how much somebody needs, right? Um, but we actually have a calculator where you can actually input sort of all these sort of key variables throughout your life on wealthandequity.org. And it can actually suggest them out to you and sort of show you where you rank relative to others. But another piece that people miss is life insurance doesn't only sort of provide benefit and value when you've passed away. And I think that's sort of a significant difficulty of the conversation about life insurance. People don't want to think about their mortality and think about passing along. But the reality is, life insurance can do a whole lot for you while you're here.
So, when it comes to the living benefits of life insurance, can you please educate the audience on that?
Yeah. So, in the most basic sense, so if we talk about sort of permanent life policies, we've heard them referred to as whole life policies, universal life policies, and sort of index universal life policies, right? And so, if you think about sort of the composition of those entities. One, it is sort of ensuring that you have life insurance and a death benefit in the event of your demise. But the other piece of it is what's called cash value, right? And so every time you're paying premium, you're creating value that can earn an interest rate, right? And there are a number of ways this interest rate can sort of be calculated, right? If it's whole life, it's typically sort of one rate. If it is indexed to an index, it can often be sort of market driven, right? And so you get some elements of market returns with some downside protection. And then there are other sort of variations of that, sort of variable universal life, et cetera. And that is sort of the asset component that people refer to, right? And so as you sort of accumulate that cash value over time, that is now sort of your asset to do things with, right? And so you can pull from that and sort of repurpose those dollars for other things. Is really sort of what people are talking about in terms of utilizing that asset. And so you get something that is giving you a variety of different purposes. Everything from your death benefit to what I'll call a savings vehicle that's earning sort of a meaningful rate of return that also has safety and grows in a tax deferred and sometimes tax free manner. And so they call it the and asset sometimes, right? Because it just does a bunch of things. And then if we think about sort of one product, if you sort of take some of those funds out, depending on the way you do that, from a sort of dollar earnings perspective, you can still earn interest on that while also repurposing sort of those dollars into whether it be paying for school, paying for a wedding, funding a business, and things of that sort. And so life insurance can almost be like a Swiss Army knife that can aid you throughout life in multiple capacities, right? And if we think about this relative to like a 529 education plan, right? So oftentimes you have children, people recommend you get your 529, which I'm perfectly fine with. I have one for my daughter. But you can also get your child a permanent life policy, take the benefit of them being young and thus premiums being cheaper, and then just put the power of compounding on their side from the very beginning, right? And so if you think about this sort of illustratively, for $100 a month, when your child turns 18, they could have cash value of call it $300,000, right? And that $300,000 can be used to fund education. It could be to fund their business idea. It can do a variety of things. And all while still having that death benefit in place. So you're ensuring sort of um, generational sort of wealth transfer and sort of the continuity of wealth through sort of the future generations to come.
That's heavy. We definitely got to get more into that. Look, guys, we're gonna take a real quick break, but when we come back, we're gonna let you know even more about the different types of life insurance policies you can get, especially at Atlanta Life. Welcome back to Financial Freestyle here on Yahoo Finance. I'm your boy Ross Mack. And look, guys, much like many other people, right? Your favorite personal finance guy is either going to be me, Ross Mack, or Dave Ramsey. And as a result, right, a lot of people might listen to Dave Ramsey. And one of the things he says is like, at the end of the day, all you need is term life insurance. And so, Ryan, I really want to get your opinion on it.
The easiest way to think about it is term life policies versus permanent policies, right? And literally, term life insurance products are called term because they are in place for a certain term, right? Sometimes that's 10 years, sometimes that's 20 years, sometimes it's 30 years, sometimes it's more. But sort of depending on the features of this product, if you are still alive, if you have a 30-year term policy and you are still alive at sort of year 30 in day one, then that policy can term out. And so when you think about to your question, if you think about Dave Ramsey, his perspective is often sort of just get a term policy and invest the rest. Like I don't take issue with that on its face, right? It's just the completion of the mission, right? And so yes, get a term policy. We sell term policies, but then what typically doesn't happen is people don't invest the rest. They spend the rest, or they just don't do anything, right? And so rather than sort of with a permanent life policy, you get the sort of investment component as a part of your product. With a term policy, there is a secondary action that you then need to take to generate the investment return that you would get in a sort of permanent policy, right? And so it's a preference thing, right? I am a believer in permanent policies sort of providing the best value, but I also understand the value of term policies. And personally, I have both. Um,
Nice.
and sort of when, yeah, and so when we talked about sort of giving your family a seven-figure sum upon your demise, and that being the cost of one night out, that is probably a term policy. And if we think about sort of meeting everybody where they are and sort of with their variety of needs, right? Term policies are appropriate for many people. And so when we talk about sort of the life insurance protection gap, a key way to sort of ensure that we start getting people life insurance policies and the appropriate amount will often include term. And so again, I don't take issue with Dave Ramsey's perspective. I do take issue when he attacks other forms of life insurance because they all have their value, they all have their sort of method and approach. And so two things can be true at once.
You know, the one thing that is not often talked about, right? So say I get married at 30,
Mhm.
I get a 30-year term policy, right? So I got, $1 million term policy, $2 million, 3 million, whatever it is, but that's only for 30 years till I get to 60. At the end of the day, right? Actuaries, the people that are, coming up with how much I should pay, and the people that are crunching the numbers for the insurers, the goal is one for them to make money, right? And my understanding is less than 2% of term policies actually pay out. And so when I do get married at 30, have kids, and I turn 60, I then have no life insurance. And so if I want to get life insurance, now at the age of 60, that premium is considerably different than when I was at 30 because, well, now I'm closer to, when I do pass away. And so another thing that, I didn't take into account when I got my first term policy was, oh, it's cheaper. Let me just do this. But the idea is that when I turn 60, I now got to take a brand new, got to do a new physical and got to screen all my health, etc. And so now, as you get older, right? And so, like, obviously, I'm understanding now. I'm doing more research. It's a lot of creative ways where you can, maybe bump up the premium as you start to make more money or something. But like the idea of having a permanent policy does seem more attractive, especially as you can kind of customize it. So talk about some of those customizable things that the average person doesn't even know about.
Yeah. So again, right, like this isn't a mutually exclusive thing. You can have more than one life insurance policy. You can have more than one type of life insurance policy. But as a general matter, to the point you just made, the younger you are when you get life insurance, the better, right? And the presumption is that sort of you are healthier at, call it 20 or 30 than you will be at 60. And so when you think about sort of pricing a life insurance policy at 60, like that is when some elements of age sort of start to reflect themselves, and people find themselves having some health issues, or just frankly, mathematically, you probably have more life behind you than you do in front of you, right? And so those are all considerations when it comes to pricing. Um, but one way people think about term is sort of matching it to a liability, right? And so to your point about 30-year term, getting it at 30, a lot of times it's because you have a 30-year mortgage, right? Or you have a child that was just born and you're trying to ensure that you can support them until they are able to sort of financially support themselves on their own. But then there are a number of ways to sort of ensure that you have coverage. The one, the easiest, and sort of why I advocate for permanent life policies is because they're permanent, right? And so we don't have this issue. And so you go through your underwriting when you buy the policy. The policy, assuming all goes well, is issued. And now you don't have to worry about that so long as you sort of pay your premiums. And but if we want to sort of think about this from a term perspective too, there's a way to sort of layer different term policies to cover different sort of amounts, different stages of life, different liabilities, different cash flows. And sometimes people do that. And so like there are myriad ways that you can utilize life insurance and have it sort of address your needs, your life circumstances. And then something that we take pride in here is sort of building a product that grows with you, right? And so if you think about sort of the normal expectation in someone's life, it's that sort of over the course of time you earn more and more money, right? And so what that could mean for 21-year-old Ross is that I can only afford sort of X amount of premium per month. But then 25, things start going better for me. And sort of that same percentage, say that was 1% of sort of my earnings, that equals a different number. And so that allows me to sort of have more premium, have sort of more cash value accumulation, et cetera, and so on and forth. And so at 30, at 35, at 40, so you have this permanent policy, you're paying your premiums, you can raise your premiums and thus accelerate sort of the growth of your cash value. And what you now have is a product that literally grows with you and adjusts to the stage of life you're in, and becomes this asset for you that you can always have.
I love it, man. Look, for the interest of time, I got one more question, but we could go all day. Not even gonna lie, because this is a super fascinating subject for me. But where can people find out more information about just general, you know, life insurance questions?
Yeah, so we understand that there are tons of sort of misconceptions, tons of unknowns. And so for that reason, we launched a financial literacy and insurance literacy platform called Wealth and Equity. And it can be found at wealthandequity.org. And so on there, you can learn about financial literacy, you can learn about life insurance, you can literally see video testimonies of the impact and the ways that life insurance has impacted different people's lives. And so, and also to the point of people being unsure how much they need, you can literally go there, sort of put in the details of your unique circumstance or situation, and actually get an estimate of sort of how much life insurance you should have based on your unique circumstances. And we think that's sort of a huge equalizer and sort of bridge builder for those who have concerns about it. And furthermore, you can get a quote, and so you can understand sort of one, how much you need and how much that can cost, and then it's your choice on whether or not you proceed. And then one other thing I want to talk about, right, is I alluded to this earlier. So LIMRA, which is sort of the research body for life insurance, does a study every year. It's called the Barometer Study. Their most recent study said that 102 million American adults either need life insurance or need more life insurance. So relative to sort of what they have, like for example, they may have a group benefits policy that covers 1 and 2x their salary. That's drastically different when we talked about the figures of sort of needing 10x or 20x. Um, but if we think about sort of what that means from a dollar perspective, they say the gap is, call it like $25 trillion. And if we think about what that means from a premium opportunity, that's $70 billion. If you think about, and that's on an annual basis. So $70 billion of premium on an annual basis. If you think about how life insurance is often sold, it's sold through agents. And so every sort of life insurance policy that you sell, you're able to generate commission. And sort of, you just heard the size of the opportunity, $70 billion a year in premium. That's a significant sort of economic opportunity. And I'm all supportive of people sort of getting their real estate licenses and having side hustles. Like there needs to be more consideration to this life insurance opportunity because you're doing good. So you're getting people a product they need. You're protecting them. You're protecting their family. You're giving them something, depending on the product, that can be an asset. And it can be a significant sort of income generation opportunity for you. Uh, and so I try and sort of tell and more folks about this opportunity because it is vast, it can be lucrative, and you're literally doing a good service by people by ensuring they have these things. And so go tell a friend.
Well, that's $1 million worth of game. People, let's give a warm welcome and thank you to my dog, Ryan Smith of Atlanta Life. And that's it for this episode, people. Make sure you tune in each and every week. Tell your mama, your auntie, and your cousins to tune in, subscribe, leave a comment, and share it with somebody they love.
Appreciate you, brother.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.